Hi, and welcome back to another episode of TSAM Digital. Today I have with me Rajiv Ori. Rajiv is an independent consultant who is passionate about developing technology-related strategic roadmaps and launching digital journeys as part of transformation programs. He has broad experience across front, middle, and back office functions, having worked for large asset servicers. Hi, Rajiv. It's a pleasure to have you here.
Hi, good morning, Anna. Pleasure to be with you.
Brilliant. Thank you very much for taking out time, Rajiv. Today, we're going to be discussing a little bit about transformation in asset managers. And my first question to you is, how has the pandemic really impacted transformation strategies for organizations?
Well, I would say the pandemic has accelerated the need to transform the asset management, landscape or transform asset management operations, I should say, because asset managers have realized the complexities of supporting legacy operating models, having fragmented processes and workflows with multiple manual touch points and lacking a robust data management framework or a discipline. All of these things create several challenges, which add to the fixed costs of doing business. So they are accelerating their digital transformation initiatives, whether they are designed to improve client experience, streamline operations, or become more agile and cost efficient. So managers are asking, how do I empower my operations and client service teams so they can be more efficient and meet our clients' ever-growing need for data, reporting, etc. They're also asking, how do I leverage technology to empower my clients, make them more self-sufficient? So from an impact perspective, from the pandemic, I look at it from a people, process, and technology view. On the people front, there is an enhanced talent management and workforce planning focus. What do I mean by that is that firms have realized they can now recruit from anywhere. So there is less of a need to be in the office 5 days, week in and out. But on the flip side, when you have a hybrid or a distributed workforce working remotely, asset managers then have to ensure their employees have the necessary equipment, the tools, and the working practices and technology so they can be very productive and effective. Part of that in the pandemic also highlights the need for maintaining clear lines of communication and support. It is very essential because as sometimes stress levels may increase due to client demands, volatility in the markets, and other challenges associated with the remote working, model. Also, it goes without saying, with increased remote working comes the greater risks of cybersecurity issues. So reinforcement and reminders of cybersecurity policies and threats such as phishing and data breaches are important focus areas. On the process side, and I would say companies are starting to think digital first in everything they do, whether it is client servicing or digital onboarding, such as investor portals, or improving their internal systems integration to better serve clients. Firms are rethinking how their technology and ops support models can better support the front office and improve client engagement. Lastly, I think there is widespread agreement that the pandemic has also highlighted the criticality of investing in business resiliency enhancements. Business resiliency plans or contingency plans, need to be constantly assessed, evaluated, and updated to incorporate new environmental factors. On the technology side, technology is a key enabler for the transformation period. I mean, the most obvious short-term impact we have seen is the spike in use of video conferencing, such as Zoom, WebEx, Microsoft Teams, to replace, face-to-face meetings. At the same time, firms are also reassessing their infrastructure and applications as they embark on their digital transformation journey. And many of them are adopting a cloud-first direction. Mm-hmm. So the shift towards cloud computing to lower the overall total cost of ownership and adoption of new technologies, such as artificial intelligence, machine learning, robotic process automation. All of these technologies firms are realizing have potential long-term benefits in order for them to create and support a scalable, flexible operating model.
Brilliant. Thank you very much for that, Rajiv. My next question is, what are the key things that asset managers should keep in mind when they're starting their transformation journeys?
Yeah, good question, Anam. I think some of the things to keep in mind when embarking on a transformation journey include number one, you start with a clear idea with buy-in at the executive suite on what is core versus non-core for the business. So understanding of the key strategic business objectives, what are the business drivers, what are the strategic goals, those are very, very important, starting point to start the journey. Another important component of the process is to have a relentless focus on the client experience. How will changing a process, whether it is through improved automation or standardization or complete process redesign, how will it impact your client experience? So as you identify potential solutions to meet those objectives, it's also important to keep in mind any existing infrastructure considerations, any constraints. So how do you balance near-term versus tactical versus long-term strategic objectives? Because transformation is a journey. It's not a 100-yard sprint. So you have to think about what is the low-hanging fruit, what are the short-term objectives, and what are the longer-term objectives we can manage. The other point I would focus on is the organizational alignment. It's important to have buy-in from all key stakeholders, whether it is front office, operations, technology, compliance, etc. Once you have identified the critical key capabilities that are required to meet those business objectives. Now, these capabilities can be owned or outsourced. We can talk about that later on. But as you design the target operating model and develop a transformation roadmap, these are some of the things that keep in mind. By having the org alignment, it will ensure that there is general agreement on the key initiatives, the prioritization of those initiatives, the changes in resource allocation that may be required to support them, and any additional incremental investments in talent or technology. Lastly, I think I'll also focus on the communication part. So there is, any journey starts with an initial communication and an ongoing communication with the broader organization. So it's important for the senior management or senior leadership to set the right tone and explain the need for change and the targeted benefits. So you have to be careful that you do not, present this as a blunt instrument to cut costs. And I think as the transformation journey begins, it is crucial to keep the wider team apprised of the progress. Mm-hmm. The last thing I would say is organization leaders also need to ensure that the traditional silos do not negatively impact or hinder the transformation efforts. And they also need to support any training required, whether it's to reskill your workers or additional capabilities. So those are the things that organization leaders need to support. So as an example, I'll say, if you want to perform advanced analytics, adoption of advanced technologies may be needed. This in turn will require more collaboration among people skilled in data management, data analytics, IT infrastructure, systems development, as well as business and operational experts. As you as you embark on your transformation journey and you define your new operating models, obviously there would be a need to support and enhance government and oversight and risk management framework to manage the operating model complexity going forward. So those are some of the key things in my mind that one should be cognizant of when embarking on a transformation journey.
Absolutely. Thank you very much for that answer, Rajiv. When we do start the transformation journey, we cannot do it without technology. And nowadays, there are plenty of technology in the market. What are the new technologies nowadays available that will help achieve the transformation goals?
And that's a good question. I think there are several technologies. The technology landscape is always shifting. There is a lot of support and a groundswell of fintech startups over the last 5 years in this space. So rather than focusing on technologies names themselves, I think I'll focus on some of the key themes. So for example, technologies that focus on delivering a strong data foundation are becoming key. They will help organizations manage the data or information friction that creates breaks and that creates lack of trust in data. So those technologies are focused on, creating a golden copy of the reference data. And those may include security reference, pricing reference, as well as corporate actions. Also, there is a focus on, having as part of that foundation, there is a golden copy of, let's say, an IBOR, which means an asset manager can trust that investment book of records, that their positions, transactions, and performance are accurate and true. So those are some of the things on the data front. Obviously, on the infrastructure side, as companies are looking to be more agile, they want to be more nimble, and they want to have scale, cloud computing solutions, whether it is public cloud platforms such as AWS and Azure, are gaining wider adoption and more accelerated adoption, I would say. Also, I've seen the use of machine learning, robotic process automation, artificial intelligence tools. Asset managers and asset servicers are using them more and more widely. And I've seen them use these tools to automate the processing of, for example, key documentation using machine learning and natural language processing as part of their digital transformation journeys. I've also seen folks are looking to redesign their middle and back office functions using newer technologies that create a more direct, transparent, and secure transaction model. There's also emerging models about distributed ledger technology. We are not there yet, but they are also focused on, how do you improve the model between the custodians and the counterparties, moving towards the goal of, industry goal of real-time trade date settlement. I think a good case study would be to consider would be the recently formed Hub, a technology-led company formed by, I think, PIMCO, Man Group, Market, State Street, Microsoft, and McKinsey. So they're targeting to build a cloud-based operating platform that will transform the asset manager's operations technology. So as part of Hub's data-first approach, their goal is to break down the silos and frictions between systems and data. So this greenfield solution, will utilize the latest cloud-based technology and security to transform the middle and back office operating processes. And the objective is to reduce cost while also supporting, numerous legacy systems and improving efficiencies by connecting to third parties.
Brilliant. Thank you very much, Rajiv, for the detailed answer. My next question is, when we're talking about transformation, outsourcing has been really popular in the industry. How do we decide what processes should we outsource? And when we do outsource those processes, what should we keep in mind?
That's an excellent question, Anam. Thank you. So, outsourcing is one of the many cost transformation strategies that asset managers might consider. The outsourcing may include, again, the definition wise, it may include, creation of shared services operations in low cost locations, or providing, outsourcing to a service provider, or streamlining software or vendor costs, or business process reengineering, etc. So historically, I would say the scope for outsourcing was limited to middle and back office activities. It was either software only, or software per services, or software and services, which is also known as business process outsourcing. Mm-hmm. But also recently, asset managers, many of them are also starting to think about outsourcing certain front office functions, such as trading and so on and so forth. The outsourcing decisions, and I would say it's important to note whether they decide to outsource a full bundle on the middle office, for example, or components of certain functions. Those decisions, are impacted or are driven by the firm, each firm's, for example, AUM size, their business model, and their operating complexity. What asset classes, what products do they hold? What geographies do they operate in? What other markets do they want to enter? And those factors. So I think a strong outsource model, is typically or should be typically anchored around one, a solid understanding of mission critical versus mission supportive processes. Again, it ties back to what is core versus non-core in our previous question. And how do you balance between the economic objectives, which is obviously to reduce cost, versus also the risk appetite of the business? Because now something that you used to do in-house is now going to somebody else. So those are some of the things you have to remember. Also, as you enter into and consider entering into an outsourcing agreement, the ability and capacity to invest in a strong governance and oversight program on the asset management side is key. I have seen many times asset managers have underestimated the change management aspect as they entered into an outsourced relationship. Also, we want to make sure that the outsourcer provides you, or that arrangement provides you, sufficient flexibility for change control that can meet your objectives, whether you're launching new products, you're entering new markets, or potentially an M&A event. So the service provider technology solutions have to pull you into the future. So make sure that they are on the right technology stack or infrastructure, public cloud platforms. They have an integrative data architecture. They support APIs and data services so you can get access to your data, digital workflow interfaces, offering sophisticated reporting, data extraction tools, etc. I think as asset managers look to outsource, they need to recognize a couple of key points. One is, at the end of the day, it's all about access to data. Mm-hmm. Because you are looking for a data that is of higher quality, meaning it's accurate, timely, and complete. So managers, prior to outsourcing, they need to understand and assess their data needs across the board: front office, risk, compliance, performance, regulatory, etc. They need to ensure that the service provider has flexible data delivery capabilities that can meet their needs. Whether these are standard extracts or reports, or these are self-service tools that the manager can use. As I said, there is a potential for significant change to the asset manager operating model, because now you're going something that you used to do in-house, you're asking somebody else to do. That a process may be very different. So therefore, asset managers, they should not expect the provider to mirror the workflow, their processes, and so on, because that may require customization on the service provider side. That could be time consuming, painful, and expensive. And more importantly, it may break the service provider's standard service capabilities. So what will happen is it may erode the service provider's ability to offer you services at scale and cost in a cost-effective manner. Lastly, I would say you have to be open-minded, as one of the reasons for outsourcing is to tap the outsourcing party or your partner's expertise, knowledge, and ideas. So they will bring recommendations and best practices to the table, which will have an impact on the operating model on your side. But I think you need to be open-minded to make sure that longer term, you are positioned for success in that partnership.
Thank you very much, Rajiv, for the answer. Really appreciate it. And we're reaching close to the interview. My last question to you is, what is the future of the industry, and where do you think we're headed?
Oh gosh, that's an excellent question. I think we have seen consolidation. I think that consolidation, or the massive consolidation, will continue to happen. I have seen a report, I think, where in one of the reports where they mentioned that there would be potentially 50% fewer asset managers by 2030. So gaining scale and scope is top of the mind for a lot of the asset managers. So in a way, either you get big or you get out, right? So asset managers in the middle market are going to be left with a decision, right? Do they consolidate with a big firm to gain access to the resources that acquiring firm can offer? Do they sell off a minority or non-controlling stake to gain access to some platform that may be available on the secondary market? Or do they continue to do it on their own as a boutique, as a niche investment strategy? So that consolidation play will continue to happen. I think in terms of innovation in product development, we will continue to see new dimensions to active passive investing and product driven barbelling, if you will. Um, so as we know, a lot of the net new flows, they are mostly accruing to kind of active, non-transparent, smart beta ETFs that are offered at a competitive price point. And also, in search of yield in a lower for longer environment, interest rate environment, the search towards alternative products or the drive towards alternative products, especially private equity, real estate, and real assets, that will continue to expand. Also, I would say as active managers are innovating their fee structures or fee reductions, and migrating from non-traditional legal investment vehicles or offering non-traditional legal investment vehicles to attract investor types away from passive investments. So ETFs are becoming, increasingly prevalent for the retail investors, as we have seen many mutual funds are being converted into ETFs given their lower expense ratios. So that will continue. I think investment managers are also incorporating ESG into their investment management process. So performance and risk analytics versus the ESG factors is becoming increasingly important. The key point there is no common definition or an agreement of an ESG standard. I think some conversations are happening in the industry. So as those standards become widely adopted, widely accepted, I think that will continue. Lastly, I would say on the product development front, new assets such as digital crypto assets or securitized tokens or intellectual property, those capabilities will become more and more prevalent. Therefore, industry will have to address how to handle it from a front to back value chain perspective. I think on the distribution landscape side, broker dealers and advisors definitely have more bargaining power. And since most of the asset manager distribution is intermediated, I think the future will see asset managers, offering value-added services, whether it is asset allocation model portfolios, in addition to the innovative products. So they will continue to seek more and more shelf space, if you will, on the broker dealer shelf. And it's also possible that asset managers may try to develop their own direct-to-client distribution strategies, leveraging open architecture platforms or expanding into international markets where wealth creation is much higher to capture new flows. Lastly, I think a couple of more points is the pandemic has thrown a new focus on governance, on cybersecurity, and risk management. So I think cybersecurity will continue to be top of mind. That risk is not going to go away. That is only going to get higher and increasing that risk. Also, firms that are already on stronger financial footing, they will be the ones, I think, that have been able to or that will be able to capitalize on market disruptions brought on by pandemic or future events. So the upside for them is win new business and grow the revenue base. The downside of not doing some of these things is you will miss out on the opportunities without the capital to invest. So those are some of the things that come to mind. I think there is also maybe a possibility of a institutional marketplace where boutique asset managers lacking scale can offer niche strategies, potentially disrupt the distribution platform. Technology is available, they can target family offices, high net worth, and others. But that may be a little bit farther down the line.
Brilliant. Thank you very much, Rajiv, for taking out time and sharing your expertise with us and our audience. Hopefully our audience has enjoyed it as well. It was certainly a pleasure to have you here. Thank you very much.
Thank you, Anna. Pleasure to be with you.